Hello, guys, and welcome to 2023. So, it's going to be a massive year for crypto, and we know that we're just coming out of the back of another massive year for crypto. So, we want to just give
Yeah.
you our overall opinions, what has happened over the past year, what lessons have we really learned, and how can we use these kind of, shall we say, the big catalytic events to our advantage in 2023. AJ, if you had to summarize in like a sentence, how was 2023, 2022 for you?
Um, a lot of learning, I would say. A lot of learning for myself was made within 2022 because obviously this is for me. I've been in crypto for 3-ish years now, and I've not really gone through a proper bear market. I feel like I've gone through a mini bear market with uh, the the COVID crash. But for me, this is sort of my
Hmm.
first proper bear market, and it's not been a massive surprise because I've already gone through a mini bear market. But I have learnt a lot, and learnt never to get too bullish when the price is having a small push towards the upside, which I know a lot of people out there still need to learn. Because they are getting really excited with these small pushes towards the upside, but then a week later we can see the price crash another 20%. So for me, 2022 has been a year of learning.
Yeah, and I'd say like during this year, one of the like major themes that I've realized is that people didn't really see it as a bear market. Like you said, nobody saw
Yeah,
it as a bear market, and it's not helped when so
yeah,
many of the, I guess, crypto influencers have always said, oh yeah, guess what, it's not, don't worry, the pump isn't over, we're not in a bear market, and
yeah,
everyone just claiming that we're going to get to bloody 100k Bitcoin, and it just not working. Um,
definitely,
it hasn't
yeah.
been easy, has it?
And then, we've had the most during 2021. We had the most adoption that we've ever seen within crypto. Crypto was at all-time
Yeah.
highs, and November 2021, adoption was at its all-time high. And then going into 2022, the price starts to crash, and this is when the most people are within crypto, and it's sort of given crypto a bad name as well, I would say, because the most amount of people are in there, and I'm sure that 2020, the most amount of people have lost money in crypto, on record. So for me, I know there's going to be a lot of people out there that are still very skeptical about crypto, and still have a bad name for crypto. But again, we've lived through this before. Myself, I haven't, but in the previous bear markets, people have lived through this, people have survived through this, and crypto has survived through this. And to be honest with you, I think, and I almost know that crypto is going to survive from this as well.
Well, look, bring us through the major technical levels that we've seen this year, just on the
Yeah.
charts, and then we're going to get into some key topics. I need to quickly go and get the door.
Okay. Yeah. So basically, looking at these charts here. So this is the weekly chart, the Bitcoin weekly chart, and as you can see, back in November 2021, we did actually have that all-time high, as we know, at just under 70,000. It was around 69,000. And ever since we hit that price, the price has non-stop been going down and down and down over the course of 2022. And we know, this is a bear market now. We're getting close to the end of that bear market, but we're not quite there yet. Now, that we had a major level coming in back in May. So the 9th of May was actually when we first tested this level. And that was sort of around the $30,000 level. So between $30,000 and $32,500. That was a major, major level. And for me, this was where the bear market for me was cemented. This is where I knew that we were in a bear market, because we were breaking a major, major support level. As you can see here, over the course of May and June and July 2021, we used this as a major, major support level. Back again in January of 2021, after we got above this major level here, we tested it as support. So this was a major level. And for me, breaking below this, okay, and as you can see, we actually retested it and then got rejected from it. This was the confirmation for me that we are actually actually within that bear market, and still there were
People
people.
didn't want to hear it though, did
No,
they? You know, and that's one of the things we very much went against the grain when we got to this point where
yeah,
you and I were like, look, guys, I think there's probably more leg to the downside, and
yeah,
I think that's where we begun on a lot of our kind of shorting journey and
yeah,
trying to find that bottom when a lot of people were like, nah, 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 you know, you stupid. A lot of the
yeah.
guys in the comments as well, wasn't it?
Yeah, 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 definitely. You know, there's been a lot of people in the comments have been quite angry at me shorting the market, but to be honest with you, it's worked for me, and it's worked for the majority of the people that have been shorting, because the market is only going down at the moment because we are within a bear market. You have to trade with the market, not against the market. And right now, the trades that I've taken and I've shown you on stream, the majority of them have been shorts, because you, again, like I said, you have to trade with the market, not against it. Trading against the market is one of the most risky things you can do.
Yeah, no, you're absolutely right. So those are kind of some of the key levels. Now, I want to bring this back to let's what do you want to start with? Should we start with someone like, I don't know, let's go Sam Bankman-Fried maybe?
Yeah,
You know, it's the major story of the year, isn't it? It
yeah,
definitely is. So just having a quick look at the headline that we see over here, let me bring this up. So as we can see, once my screen loads, good news for FTX customers: the Bahamas sees $3.5 billion in assets. Now, look, that's just the headline. So to really delve into this, obviously we know that Sam Bankman fraud has essentially really just remapped the way that everybody thinks about crypto, being such a
yeah,
big exchange and kind of dropping uh, such a large amount of assets from, like, what was it, $10 billion worth of assets, to now being pretty much completely bust.
mm.
It's what has that taught you? You know, has it given you any type of worry about different exchanges now, given that FTX was the second largest in terms of volume?
For me, it's opened my eyes to it, and I've always kept my stuff on the ledger anyway, but I feel like I've put too much on an exchange. So for me, it's looking at this year, it's the realization of how risky exchanges can actually be, and only to put as much on an exchange that you can actually afford to lose. Because like FTX, a lot of people lost money in that. A lot of people would have had what they can afford on there, but there is a lot more
Mm.
people who would have had their life savings on there as well. So you've got to be smart about it. An exchange is a place where you put your money on for the amount of time that you're trading for, then you take your money back off it and put it on a cold storage wallet. For me, that's what I've learned. And I held a lot of my profits on the exchange, and now what I've decided to do is actually take those profits off exchanges after that the FTX crash and the FTX bankruptcy. And yeah,
Yep.
it's a year of realization with exchanges. Exchanges aren't solid or like safe places to put your money. Yes, they can be very helpful with you making crypto, as in leverage trading and spot trading, but you use it for that solely, and then once you've taken your profits, you put them back onto a cold storage wallet. So for me, it's realization that exchanges are not always the safest place to hold your crypto.
They're not, no. And so what's your thoughts about this whole, reserve, like proof of reserve? Because this is one thing, and
Mm,
I'm on Cointelegraph at the moment, sorry, Market Cap at the moment. So you can see they have this little tick here. And if you guys, if you hold your money on any one of these, I highly recommend you go ahead and just check it out.
yeah,
Obviously we are a big fan of Bybit. We use it very heavily. If you do want
yeah,
to join, use the link down in the description, get up to over $4,000 in return whenever you deposit money. But it's really, really good that I think this proof of reserves is now being implemented.
yeah.
It's a shame that it hasn't been implemented previously, because
It would have
you have
saved a lot of people.
yeah, you have reserve limits for banks. They have to have
Yeah,
overnight reserve requirements. And now I know with like fractional, is it fractional banking? Yeah, fractional reserve banking. You don't necessarily need to have as much, and that's questionable, but there
yeah,
is still a protocol in place. So this, for me, is going to be one of the biggest changes that we actually see to the likes of exchanges moving forward,
yeah,
and something that I think we might end up weaning out a couple more scams and weaning out a
Yeah,
couple of these people who, and it's not, I don't think it's ready yet. I don't think this is the end, the end format, because often people will move money into a particular, account, they get audited, and then they move the money back out again.
yeah,
So they give themselves a small loan or something from somewhere, maybe a bit more risky, to make it all
yeah,
look safe. And then, they go back about their business,
yeah.
which I think it can be improved.
Definitely, and this is where regulation will come in and help with that, And if regulation does come in and say they have to show their exchange reserve, then a few more exchanges could actually, come to the realization that they they don't have the money. So
Yeah.
like you said, I think there could be a few more that could become bankrupt, and a lot more people are going to lose money. Once the truth has been uncovered, but as of right now, we don't know who that is.
No, exactly. And talking about reserve, obviously we have to mention about the Fed. That was another ginormous talking point this year. Obviously they were raising rates for the fastest rate hikes in like 40 years, ever since Paul Volcker back in 1970s. I believe it was 70s. Yeah. So he famously he was basically Jerome Powell back in 1970,
Mm.
and he just took interest rates up to, I believe it was around, I want to say I want to say 15% or so. But basically, inflation was running at like 12%. So he just goes, okay, well, why don't I just make the interest rate? At the moment, we see it's 4 as the Fed fund rate. He was like, well, why don't I just make it more than inflation? I'll just make it 14%. So that was a massive jump. It was a
Yeah.
massive jump. So we haven't seen anything like that since.
No.
Obviously, this year there has been some correlation with Bitcoin dropping whenever we see a Fed rate hike, just in
Yeah.
the same way that all of the traditional markets drop. Um, are there any key takeaways for you? Maybe that whether it's around trading at particular times, like are you
Yeah.
now a little bit more cautious because we see these massive fundamental drops whenever there is a big news announcement?
Yeah, I've spoken about this as well, to everyone that watches. I feel like you've taught me a lot as well, because before I met you, I was solely looking at the technical side of things and not looking at the fundamentals as well, such as FOMC meetings, big events like that do really affect the price. And for me, implementing that into my trading strategy has helped me. It has helped me sometimes, and then other times I sort of regret implementing it. So one of the biggest things that I've actually learned this year, with looking at the fundamentals and the technicals together, is to still trade as in I'm a solely technical trader, but to counter in the fundamentals. So by doing that, I would not trade with as much as I normally would when there is a big event. And there is a trade that I missed recently because I was looking, because it was the FOMC meeting that happened
Mhm.
exactly as that trade was supposed to be entered into. So that trade happened, I think, when was the FOMC meeting? Was it six o'clock UK time? I think it was.
Yeah.
And I got a trade signal at that moment to short. However, the FOMC meeting was happening, and I know that we knew that they were going to have a 50 instead of a 75. And I knew that was going to push the market towards the upside, and potentially stop out that short. It didn't. But now I look at that and I learn from that. And I think, well, next time, instead of just completely ignoring the trade and not trading it, maybe I should trade it, but with half the amount that I would normally trade it at. Just taking risk out of it, because I'm already entering the trade with higher risk because of the FOMC meeting, and I know that the price is going to pump and then dump. But just taking a bit of risk out of it by trading with less. So for me, I feel like you've taught me to implement the fundamentals, and that has helped me as well, and helped me trade. But everyone learns. I still have to learn as well, and learn how to use them together as best as possible.
Yeah, that really is the key, isn't it? Because I think, a lot of times, or I think with a lot of different content creators on the, on platforms like, I don't know, YouTube, whatever it is, you might use TikTok, Instagram, whatever. But I feel some people might focus more so on one, and that's often
Yeah,
what people learn. But for me, one of the biggest lessons that I've learned is yeah, it's around trying to time the market in particular, scenarios. So
Yeah.
if, just like you said here, AJ, if we do have an FOMC or a jobs report, and again, another thing that I kind of have learned is that I used to traditionally think that crypto was quite separate to the traditional markets. So,
Yeah. Yeah.
I might look at the bond market and I'm like, okay, I know for a fact the bond and the stock market are going to be affected by the jobs report. Okay. And that's just undeniable. But perhaps crypto is going to be slightly different. And I think throughout this year, as we've heard from Jerome Powell, as we've had, economic data centered around, how the US is, how the US economy is performing with regards to GDP, that affects Bitcoin. It
Definitely.
does affect Bitcoin. And so those are things that, one thing I quite like is looking at the overall financial system as a bit of a puzzle. And Bitcoin is affected by the likes of, I don't know, let's just say, I mean, a CPI report.
Yeah.
You wouldn't normally think that because everyone is very Bitcoin maxi. And,
Yeah.
Bitcoin, we are our own financial system. We
Yeah.
don't need the US, we don't need
No.
anyone. But
And
it's really shown me who runs the markets, even the crypto
yeah.
markets. It's the big banks that run the crypto markets, essentially.
Exactly, and that it shows that a lot of banks are getting into crypto as well. That's what this shows me, which for
Yeah.
me it is. You can look at it in two ways. You could look at it as being good, but you can also look at it as being bad, because obviously we want to move away from the banks. But when the banks are getting in, that they are scared.
Yes, yeah, exactly. And I'm actually going to do a video. So there's been a few very big reports recently around so I'm going to do two different videos. One will be central bank digital currencies and some of the risks that are posed around that, just around our freedom and how that kind of, what they're creating is they're using blockchain to essentially do the opposite of what Bitcoin was created for. So I'll do a
Yeah,
video around that. And then I'm going to do also another video about how central banks are going to be allowed to buy crypto.
yeah,
And if you look, they're allowed to hold up to a certain percentage. I believe it's 1 or 2%. And so if you just take the smallest allocation of 2% of central banks' collective money, that turns out to be something like $3.7 trillion. And so if that amount of money floods into crypto, we know that how much, what's the market cap at the moment of crypto? It must
um,
be, I haven't seen in a while. I know everyone was, so market cap is 800 billion. So if there's an influx of 3.7 trillion,
yeah.
that's going to be an absolute massive explosion for crypto. So that there is a lot of stuff that will be coming in the future. But I'll shift on now into away from like the Fed and into this. So this is something I've shown a lot of quite often. This is the digital asset fund flow report. Okay, I like to look at this weekly, just have a quick look and see what's happened. So we're not looking at this, and this was released in middle of December. So the week and the monthly data is not very important, but as a year collective, so the year to date flows, which is basically just throughout the whole year, we see a movement into Bitcoin, which is quite interesting, and also an outflow of
Hmm.
Ethereum, which is quite interesting. And you can look at the overall assets under management from these different big institutions. And
Yeah.
so you can see they're kind of aiming very much towards Bitcoin, very much towards Ethereum. Now, I mean, AJ, do you kind of see this and look at this as being potentially a very good sign for Bitcoin? Are they loading up now? Will they continue to load up? And is that a positive thing for us?
Well, the way I look at it is, I did the same thing, and because when I knew that we were going to be in a bear market, or thought that we were going to be in a bear market, I shifted my portfolio from altcoins to Bitcoin, and that you've done the right things when the big institutions are doing them as well. So looking at that, I can tell that I've done the right thing, and the reason they have done that is because, well, come out of Ethereum into Bitcoin is because they knew that Ethereum was going to get hit a lot harder than Bitcoin. Um,
Mhm.
so looking at that, for me as well, for my sake, I know that I've done the right thing within this bear market because I've done the same thing and shifted my portfolio from the altcoins to Bitcoin, and it has saved my portfolio a lot. Of course, my portfolio has been hit quite a lot as well, but it's not been hit as hard as if I had a load of altcoins.
Yeah, and that's the thing. I think we're going to see a lot more of this. Bitcoin is digital gold. I think it's quite
Yeah.
hard to sell that whole idea at the moment, just because crypto has underperformed massively. And at the moment, Bitcoin maxis are still quite a small group.
Yeah.
Even looking at this, there's $300 million that's entered year to date. And now that's
Yeah.
not really that much, is it?
No.
When you think
Yeah.
about the money that institutions have, the likes of BlackRock,
Yeah.
they manage $9 trillion. So 300 million, it's not even, it's like a third of $1 billion. So
Nothing.
it's it you know it will definitely be interesting in the future to see Bitcoin become a bit more stable. And also I think we need that as investors, like just for our sanity.
Yeah.
um,
Yeah, it is quite
yeah.
hard to be a Bitcoin maxi nowadays. I feel like for myself, during the bear market, I'm a Bitcoin maxi because I put everything into Bitcoin because it's the safest thing, and the price doesn't crash as hard as the altcoins. But it's really hard to be a Bitcoin maxi within the bull market because you see so many people making massive returns on these altcoins, which they are. Good projects as well, and they could go very far in the future if they do the right things, they take the right steps. So like you said, the Bitcoin maxi community is very small because it's very hard to be a Bitcoin maxi when you're seeing people make a lot of money with the altcoins.
Yeah, no, that is very true, because everyone gets excited about Bitcoin, but
Yeah,
we're at the stage now where, like you said, those 100x coins, Bitcoin is not a 100x coin.
no,
And
no,
I mean it probably is over a long period of time. But
yeah,
at the moment, when we look at a 100x coin, we want a 100x within like a year, or similar to when you get, Bitcoin back in the day, it would, shoot up and it was very much 100x coins. Those are now
yeah,
being found elsewhere.
yeah.
I've got there's a question from about XRP, but just quickly, AJ, while we're on this, do you have any coins that you really like? Are there any potential, 100x coins that you might be looking at?
Okay, yeah. Let me just. I do have
This is
a
just off
list.
the top of your head.
Yeah.
What I'll
So
quickly do,
yeah.
yeah, go ahead.
Avalanche is one of them. I've really liked for a long time, and to be honest, I'm not. I look more at the technicals. I'm more of an actual trader rather than an investor. But
Mm,
Avalanche is one that I have invested in within the previous bull market. I was very successful with that, and that is one that I'm going to be investing in within the next bull market as well. Of course, I took profits off of that as I started seeing the price of Bitcoin pull back because I knew that we were going to go into that bear market, but that's one of them. Near Protocol is another big one that I want to get into. I did get into that a little bit late in the bull market, but I still made a profit on that and then got out in a profit as well. But again, I'm looking at getting back into that once the bear market is over. And Theta is one of my favorite ones. Theta, because it's the owners of the co-founder of YouTube is actually the founder of Theta, and it's a way for streamers and gamers to which streamers and gamers, it's a big community. They've got a big community.
oh,
They're
ginormous. And it's only
ginormous.
growing
Yeah.
as well with like esport competitions and everything.
Exactly, yeah, and Theta is a way. They found a way to get paid for doing it as well. So getting paid for actually streaming in crypto as well. You can share your computer power. I'm not a
Mhm.
computer nerd. I don't know everything to do with the computers, but I know that you can share your computer power with others and get paid for it. People spend a lot of money. People spend tens of thousands on computers, but they're not
Yeah,
always using them, and they're very expensive to run. They found a way to share that power with other computers, other people in your area, and you can get paid for that as well. So it's not just a burden that's sitting there. You can actually get paid for the power that your computer has as well. So for me, I think that's a very good token. I think it's a very good project, and I am going to be looking at heavily investing into that when the next bull market comes around. I think they can do very well as well.
Yeah, so for me, I would say, just a couple ones that I quite like. I quite like Cosmos, Atom.
Yes.
I believe in the interconnectivity of different coins. I think that's going to be really good. And I think, being able to find different networks that can work together, that is really
Yeah.
going to be key. Because look, the people who work in shipping, they're going to want to work, if they're shipping luxury goods, for example.
Yeah.
The shipping company, they're going to ship luxury goods, but they're also going to ship cheap cars. They're also going to ship sunglasses, that, like,
Yeah.
little, like, fake Ray-Bans, for example. So if these different businesses are choosing different chains that are specifically built for their industry, such as, I don't know, let's take VeChain, working with, tracking luxury goods, because I believe one of the founding members, or one of the, executive team, they used to work within Louis Vuitton. So I
Yeah.
think, like, you're gonna have to have this interconnectivity, and that's something that I think is really, really good. So that's one I'm looking at. Another one that I've mentioned a few times before is going to be Rose, and that's the Oasis
Yeah.
network. It's just a layer one blockchain, and so it's essentially increases the throughput and lowers the gas fees, and also quite secure. So trying to solve that trifecta of scalability, security, and essentially cost. And so they're pretty prevalent throughout DeFi gaming, and a couple other different aspects. So those are some of, I guess, two of the coins. Maybe also Matic, just because Matic is working with
Mm.
so many different companies, and also, they work with EY, which is a world-renowned auditor. So it's one of the big four accounting firms, and the big four accounting firms work with everyone, any big company, any of the top 500 company, Forbes top 500, or however you want to call it. They will work with the big four, or one of the big four companies. So I think
Yeah.
seeing this being integrated and working with really strategic partners, this is what gets me excited, because I don't believe in speculative assets, people buying them just for the sake of buying them in the hope that they go up.
Yeah.
That's obviously what we're doing. Investing is speculation. But
Yeah.
I genuinely believe that if you can find one with a strong use case and some really
Yeah.
good partners, you're going to be onto something quite good there.
Yeah, I know this is quite controversial, but I see this with NFTs. I see the future for NFTs, but I just don't get the hype around NFT pictures right now. People paying millions and millions for a few pixels on the screen, which in fact the people who created those pixels can actually change the photo to whatever they want as well. I understand, some of them. I know Bored Ape Yacht Club. I know they had a massive party on a yacht, and you could only be invited if you had one of those NFTs. But for me,
An
it's all just a
expensive day
hype.
out, though, isn't
Yeah, it's just yeah,
it?
$2 million for a party on a yacht. Okay, that yeah, they do
Yeah,
other things, but they could stop doing those things at the same time. They could stop whenever. So for
yeah,
me, it's just all hype. NFTs is all hype right now, but I do see the future for them. I see them being integrated into gaming, and we're already seeing that happen as well. And I can also see them being used for tickets as well. NFT as tickets to go to a football game, to go to a concert, stuff like that. I see that in the future, but right now for pictures, I just don't see. You spend 2 million on a picture, and then you put it on a screen in your house, and you have to pay for that screen to be on as well. It's just rinsing you of money. So for me, I just
yeah.
don't. I just don't.
No,
I
I
don't.
agree. But I think, especially when you look at the likes where, there's, like, what's it, that picture of the Rock, like, it's just not the Rock Johnson, just a Rock, and it
Yeah,
sold for like 40 mil or something ridiculous.
yeah,
And again, I think that I think it's a trader's market, and I think
yeah,
a lot of people got duped. People were
mm,
flipping NFTs and were making money from flipping NFTs, but I
yeah,
think the long-term holders are now sitting there and they're a bit like, Jesus, I really, like, I screwed it on
yeah,
that one.
yeah.
And because you can see now, like, if you just have a look at some of the trading volumes, so we can see the sales in dollars, and we can see the number of sales.
Hmm.
The sales in dollars being the white line, and then the number of sales being the red line. And they've all taken a downward trajectory this year. It's a very strong downward trend. And like you said, I think it's gonna come, it will make a comeback,
Yeah,
but I think they're gonna have to have some form of utility. And that's why I
yeah,
mean, I quite like Chili's. They're
Yes. Yeah.
partnered with like UFC, with FC
Yeah.
Barcelona, so many top football clubs, so many different sporting outlets. And on there, just like you said, you can vote for stuff. You can say, hey, look, actually, I want to, what might I want to do? I might want to, I don't know, vote on who's going to be the starting 11 at a football game,
Yeah.
or, what kit are they going to wear? Or,
Yeah.
just different things like this, or, who's going to be the new player signing. That's a
Yeah.
really good way to engage the
Yeah.
community and the fans into the sport itself. And also helps you retain fans, and then you've got more people coming to the match and paying for actual tickets. So
Yeah.
those types of things, I'm really excited about that.
Yeah.
Just
Definitely.
like you said, but it's the utility, isn't it?
Yeah,
That's not
that's
there.
all that needs to be implemented into it. Utility. There's no point in spending $200 million on $2 million on a few pixels on a screen, and that's all you get. You don't get anything else from it. You just get a few pixels, which someone could screenshot and yeah, all you're paying for really is the rights to that photo. But then again, the person who created it can also change the photo at the same time. But yeah, as you
Yeah.
said, once the utilities actually been implemented into it, then yes, NFTs are going to become very, very useful in the future.
Yeah, I absolutely agree. And then there's so we'll just answer this question about the XRP. We'll go through
Yeah,
just I don't know, a couple of questions. So I see Kryptonite. Glad you like the stream, guys. That's really good. Drop a like if you did, and also
yeah.
subscribe to the channel if you haven't already. Could you give advice on XRP Ripple? Any chance of a 3 or 4x this year? I mean, look, I think just to kind of briefly, I'll jump in before you can say your piece here, AJ. But look, I think it's majorly down to the SEC. And so
Mhm.
it does seem as though the SEC will lose their case. Okay, I think they might settle outside of court, and come to some kind of agreement where they don't get a win and say, hey, Ripple, this is actually a security, but then also Ripple, they don't have to potentially run the risk of losing, even though they've already kind of lost. So we've seen here that the headline is the XRP holders are the biggest loser in the Ripple case, and that is true. So
Mhm.
this is quite nicely, yeah. Okay, so it's quite nicely outlined here. It has happened despite the regulator's mandate to protect customers. In his right of mandamus, he mentioned that the SEC's take on XRP constitutes a security that is unprecedented in over 70 years of security law. Because they want to invest, they want to protect investors, but when you've got an SEC case against whether it's a security or not, essentially just the asset XRP, it's
Mhm.
obviously going to hurt the people who are holding it. So I
Yeah,
think XRP could see a big bounce, but it very much depends on the SEC. And even if it does, I don't think it's going to be a 3 or 4x. I think it will just release it. It will see a nice pump. People might buy into it, but the overall situation is that we're still pretty negative in the
yeah,
overarching crypto market. So I would just treat it like any other altcoin, and I wouldn't be buying loads of
yeah,
it because I'm not buying any
yeah.
altcoins at the moment.
Yeah, exactly. I'd say exactly the same thing. I've been saying it for a while. I'm not buying altcoins right now. What's the point? You're going to lose money if you buy altcoins right now. And XRP,
Yeah.
I'm not even really thinking about buying altcoins anytime soon until I'm happy that we are at the bottom of that bear market. And XRP again is going to be low down on the list because of what you've just mentioned. It's uncertain. We don't know what's going to happen. I don't think we've seen this happen before either, so we don't know how or what the result is going to be.
Yeah, exactly. No one really knows.
Yeah.
And also, it's just a question here. What happens if the world's internet gets shut down? Well, basically, I mean, Bitcoin isn't online. It's an online asset. So ultimately, if the network doesn't do any transactions and there is no electricity, then I think we're all pretty screwed. But I don't know the answer as to whether it would just begin again after every Bitcoin node shuts down. I don't know what would happen
Yeah.
with crypto actually at all, but it would be interesting. But no, if there's no electricity, you won't be able to do any transactions. You won't be able to mine and so it's mining that keeps the network open and up and running.
Yeah.
So if there's no mining and there's no nodes, I think we're all screwed.
I mean, if
To
the
be
yeah,
honest,
yeah, yeah,
but
but
I don't know.
also, well, banks as well. You know, if the internet turned off, I'm not sure how, because they don't keep it on paper records anymore, do they?
No, 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 because they use
Still on.
the Swift system, and the Swift system, is banking messaging in between each other.
Yeah, so
You know.
the whole world would be messed up if that happened.
Oh yeah, and like, hospitals will go offline. Everyone. It basically, if there's no electricity, we're all screwed, and
Yeah,
Bitcoin is the least of our worries.
we're
That
going
you're
back
not
to
going
the
to have
Stone
food
Age.
delivered to your country. Yeah, mate. I'm like that's when people have the big fallout bunkers.
Yeah,
There was this program. What was it called? Doomsday Preppers. Have you seen that?
I haven't, no.
Oh, it was actually quite a banger. It was quite good. It's just all these like people, mainly in America, who were like, I need 10 shotguns. And he's got like 50 kilos of freeze-dried chicken ready for the day that everything goes nuclear. And they got like an underground bunker and stuff. Quite cool. But yeah, I mean, not very good for not very good for anyone. And
No, definitely not.
we're going to end on this then, AJ. When do you see a crypto market bottom? And
But just
I'm
reading
also
that.
going to throw in there. Yeah, I'm also going to add in how much, what's the price target if we see a crypto market bottom?
Yeah, so I just where's it gone? So I just had a chart open, but I've obviously just changed to a different chart. Let me go back to Bitcoin. Yeah, for
Is
me,
it the CVDD?
no, I wasn't going to bring that. I was
That's
going to
one of
bring
the highlights I should have mentioned about the year, actually.
yeah, the
CVDD.
CVDD. Yeah, we've actually tested that. Let's bring that up quick. Let me just
I
bring
like
that
that.
up.
That little thing.
But yeah, the CVDD, I'm pretty sure we did actually test it and we have bounced off it, and it has predicted the bottom of
It's,
the last
it's
three bear
really good.
markets. It's a really
Yeah.
good. It is a really good indicator, but we have to see because we're looking at other technical indicators. I'm looking at other technical indicators as well, and I've got them up here. Let me just make it look all good. And it's telling me that we could go lower. And we're looking at bear flags as well. They're giving us signs that we can go lower. So starting off with this 8 hour here, we have this bear flag here. We've taken we've broken that towards the downside. This is giving us a price target of $11,000, taking it from the previous high, the top of the flagpole, to the bottom. This gives us a price target of around $10,000 to $11,000. So this is why I think that we could go lower. We've been using these bear markets throughout the whole. We've been using these bear flags throughout the whole of this bear market. We've seen multiple. Is it this chart that had them on? Okay, so we had one here. So this was a bear flag right here, which broke towards the downside, okay, and that price target was hit, okay, from this previous swing high here, and even this one here was a bear flag as well. That price target was hit. I know the lines aren't on there anymore, but this is what we've been looking at over the course of the year, and this is what has been actually working for us. This was an even bigger bear flag here. That bear flag target was hit. So we've been using these bear flags, throughout the course of this bear market, and they've been very, very successful. They've worked for us, and we've had another bear flag here, which has broken towards the downside. Potentially, this could be that last bear flag that takes us to the bottom of the bear market. Okay, takes us down to potentially 10,000, potentially even 10,000 I would say would be the bottom for me, but before that we have 14,000. That is a major monthly level, a major monthly support level, so that's going to act as support. But if we break below 14, I reckon 12,000, 11,000, and then potentially even 10,000. I wouldn't expect a break below this blue box here, so this blue major support level. Yes, I think we could get a wick below it, but I don't think we will get a candle break below it. If we did get a candle break below it, I think that would be very, very bad for crypto, because it's been a major support level here, a major resistance here, major resistance. This is just a major level at around between 11,400 and 12,200. But I do think we could see a wick below it, potentially down to 10,000. We will have to see. But yeah, this CVDD that we were looking at, coming over to Wooble. Bringing up Bitcoin price models. Here we go. So what we're looking at is actually this pink line here, and this is on Wooble.com. So you can go check it out there. But it has predicted every single bear market. So this was a CVDD floor back in November 2011. Okay, as you can see there, we perfectly, the CVDD perfectly predicted that bottom. Okay, we can then, oops, I've just zoomed in a bit too much for my
Oh, he's
liking.
ruined it. He's
Uh,
done it.
yeah, let me just go home. There we go. And then here, okay, we have another test of that CVDD, literally testing it pretty much to the dollar. This was back in January 2015, the bottom of the bear market there. As you can see, we tested that CVDD, that pink line, perfectly. Okay, and then we coming to 2018. I think this was, yes. 2018, December 2018, again, tested that to the bottom perfectly, and bounced off of that. Okay, we came close to it during 2020, COVID crash, of course, but we didn't touch it. For me, that wasn't a proper bear market, sort of more of like a half bear market. But yeah, coming into November 2020, was it November 2020? 2022, sorry, November 2022. Yeah, we tested the CVDD perfectly. Okay, we tested it perfectly, and we actually tested it again in December as well. And we are hovering around the CVDD right now, and it's predicted the bottom of the past three bear markets. Okay, we can see that. Is it going to predict the bottom of this bear market? We don't know. Okay, these are never 100% correct, but what it tells me is that if we break below the CVDD, we could see lower. But if we can stay above the CVDD, then yes, that is the bottom of the bear market. But there is a possibility that we could break below the CVDD. Okay, it's not certain that it's going to hold the price of Bitcoin up. We could see a break below it, and a break below it could have a push to 10,000, 11,000, 14,000 potentially. We'll have to see. But yeah, I still expect lower. But the CVDD says the opposite. But we will have to see. If it does break the CVDD,
Yeah.
then what I've been talking about, 10,000, 12,000, that is most likely going to be hit.
Yeah, and I also agree. I think we will probably see the likes of maybe like a 14. I think is quite likely. A 10K I think will happen, but it might be quite short. So I
Yeah,
don't think we're going to sit around about that 10K level for very long because of just instant buying pressure. People already have lol. People already have um, people already have so many different buy orders in at different levels, and so I
yeah,
think we will see if it is a crash, it's going to be a bit of a flash crash. you know
yeah. Someone wants some attention
uh,
there.
Everyone give a like for my dog Caesar. Hello, it's Caesar.
Yeah, so just looking at this here, we can see everything that's happened. So January, this is when we were wondering, are we going to see the price go higher, new all-time high from 69,000? As we know now, that didn't happen. And then this is big NFT hype. The Bored Apes, Pokemon Go. I don't know if you remember that.
Yeah,
But
no,
yeah,
I don't.
May we had the lunar crash. That was really not good for the markets. We had 3 hours capitals and Celsius as well in June. And then,
Mhm.
going on, that's when Celsius was declared that they were bankrupt. 3 hours capitals as well. Then we had BlackRock and Coinbase. Then we had, this was August, all the hacks of, Solana and all the others as
Yeah,
well. The merge in September, which for me went really well because you couldn't even tell that the merge happened. So for me, that went
yeah,
really well.
that's the real test, isn't it?
Yeah, yeah. I feel like if it pumped, it would have been bad. If it dumped, it would have been bad. But because it just didn't do anything, I think that was good.
Yeah.
And then we've seen Elon Musk in October acquire Twitter, and then November.
That pumped
Yeah.
Dogecoin, didn't it? When
Yes.
he yeah, everyone was like, oh, everyone's going to have to use Dogecoin in order to buy stuff. And Twitter, you're going to have to pay for, was it pay for your blue tick? Oh, you're going to have to pay in Dogecoin, you know?
Yeah. Yeah. Luckily,
Yeah. And then
Sorry, go
sorry,
on.
carry on. I was going to say, and then, yeah, and that luckily didn't happen. I mean, I'm not like a
Yeah.
great fan of Dogecoin.
No.
But then that all led us into November where we had Sam Bankman-Fried.
Yeah, exactly. And then December,
Took the
he's
world by storm.
yeah, exactly. And the thing I find funny about it is he said he's got about $100,000 left to his name, but then he gets bailed out for 250 million.
Yeah, I know. Yeah, it's like, I mean, yeah, he did have to pay the bail, fortunately,
No,
but he would have been right screwed, wouldn't he? If it was, because the thing is, if it was like a normal bond, you would have had to pay the full amount, or even like 10% or something. But he,
yeah.
yeah, he's kind of stuck there, like, right, okay. But now he's living with Mama and Papa, having a good
Mhm.
time, even though he's going to try and say, "Oh, I'm not guilty." Notice how everyone's turning on him, though. Like all of the ex-employees and stuff like this are like, "Okay, yeah, we can go against this guy. He's not our boss anymore. I don't
Yeah,
mind."
yeah, not scared of him anymore.
So, no, exactly. But there you go. So anyway, look, guys, that's everything from us. I
Yeah,
hope you enjoyed the video, some of the content as well. Going through everything from FTX hacks, Fed rates, NFTs, and that's our overview and some of the lessons we learned from
yeah,
2022. But the key thing that I learned was just always use protection
yeah. Always use
in every
protection.
aspect of your life.
Exactly. Exactly. Always use protection.
There
Anyway,
you
thank you
go.
very much for watching, guys. Just to mention the technicals quickly. I know we didn't, we haven't covered them, but still nothing is happening. Volume isn't coming into the market. So right now, just still sat on the sidelines waiting for a trading opportunity. But yeah, I think that's all we've got for you.
All right, lots of love from the channel, and we will see you in the next one. Thank you very much, guys. Take care.
See you later.
Bye.